Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. I'm trying to record without coughing. I'm probably going to do a lot of editing for today's video. I went to the urgent care yesterday. I'm so sorry to the Discord members, guys. I really apologize. And I had a couple of new members as well, and I couldn't do my duty for them because I ended up going to the hospital yesterday to urgent care. Now, Uncle does not have COVID, but I had. They told me I had flu A. There's a flu A and there's a flu B apparently. I tell you, the last 4 decades of my life, I've only known about the flu, and yesterday I found out that there's a flu A and a flu B. Wow. So yeah, a lot of aches and pains, and I'm having trouble speaking. So, but my love for this, for trading, my love to be Uncle Charles is what driving me right now, and I couldn't just not make a video. But what I like to do, very similar to yes, I'm just gonna cover the SPY because talking too long is painful for me. But I can give you guys the SPY. You know the old saying: if you can't run, walk. If you can't walk, crawl. Right now, Uncle's crawling. But yesterday, guys, we spoke about a couple of things, all right? We spoke about this down green trend line, and we had a breakaway gap. You guys can see here, breakaway gap. We had a bullish island reversal. There's a gap there, there's a gap there. So a bullish island reversal that recaptures a multi-month trend line that leads to a breakaway gap. And yesterday we had a bounce right up to my white trend line. Most people I spoke to, they were very bearish. I use Webull to trade, guys. So when I went in the Webull comic section, a lot of people were bearish. And it's because majority of retail traders were bearish. I think that's why the market makers are able to push it up. And you really gotta follow the price action instead of trading what you think. Trade what's in front of you, not what you think, guys. In order to go bearish, we identify a couple of bullish setups. And in order to go bearish, we have to see those bullish setups get invalidated. Okay? It was as far as yesterday's trading, it was pretty similar to last Friday because the market makers, they started off, this is yesterday. They started off with a breakdown. I had a 600 level. I wrote in my Discord right here. If 600 holds as support, 601.5 and 603 in play. If 600 fails, 598 and 596.5 is in play. You guys can see it broke down on the 15-minute chart, but unfortunately, it was only able to go as low as 598.68, which did not hit my 598 target. And then what happened? They had a false breakdown setup, one of the greatest trade setups of all time. When we trade with the trap, we broke it down support, and then we recaptured the lost level, which triggered calls. False breakdowns trigger calls. And it was similar to last Friday. If you guys recall, to last Friday, last Friday's price action was here. SPY broke. I had a 596.5 level. SPY broke it down right there, and then they recaptured it. False breakdown. That's why Uncle talked about the importance of trading with the traps. And now look at this. Holy moly donut shop. We had, based on this downtrend line here, guys, it also aligns with my 603 fib level. We can see that the SPY is above it currently. What does that mean? It means we have another potential bullish breakaway gap because we ran into that trend line yesterday and we paused there. Now we're gapping above it. That is a bullish breakaway gap. When do we get bearish? We get bearish when these bullish setups get invalidated. So, if we're above 603, that's qualified as a bullish breakaway gap. And if that gap up is bullish, we need to see a gap and crap. And we need to know the level that must be lost, which is 603. So I have support at 604.5 and 603. We want to see both levels fail in order to get bearish. Bearish. If a top is to be in, we need to see bullish setups get invalidated. So today, 604.5 and 603 must break down to get bearish, and that would put 603, 601.5, 600, 598, 596.5, 595, and 593.5 all back in play. I would not look to short unless we get some bearish setups, guys. Stop trading biasly, please. It's costing you guys a lot of money. I don't want to see you guys lose money. Now, that's the bear case scenario. Bull case scenario, as long as we're above 603, my general lean is bullish. I know the RSI is overbought, but we can't just trade based on the RSI being overbought. All right, it has to be used in conjunction with the price action, because just because something is overbought, it can get more overbought. Trust me, you don't want to learn the hard way. But overall, above 603 is bullish. Next resistance is at 606, 607.5, and I have a fib level at 609. It's a previous pivot high from December. Those levels are all in play as long as SPY is above 603. Do not go short unless both the support of 604.5 fails. And like I always show you guys, we like to use the 15-minute chart. We are day traders. We don't marry the trades. In and out, baby. If one setup don't work, we'll cut loss, we'll reset from scratch, and get ready for the next setup. Does that make sense? We don't take it to heart. In and out. One trade setup to the next. Level to level style. Unbiasedly. All right, guys. Thank you guys so much. I'm just really sick. I'm in a lot of pain, guys. I'm really sorry. But I hope you guys found value in this. Remember, don't go short unless 604.5 and 603 fails as support. Because below 603 would invalidate the bullish breakaway gap. And if 606 clears, 607.5 and the previous high from December is in play. Okay, guys? Good luck. I love y'all. Bye!